good morning, and good morning.
Morning.
Fabulous episode of Exit Strategies Radio Show. Hey, I'm your host. That is me, Colvin J. Millette, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. So, guys, look, we have another fabulous show episode set up for you today. Look, we have went and got one of the greats. All right. Look, I've been doing this for a long time, and I've met a lot of people in my years who have been quote unquote in service in this industry. And from the mortgage side, guys, it is always important that you have someone who understands not only what it is you're trying to get accomplished, but also understands how and knows how to serve and help you. So, guys, we are super duper excited to have with us today none other than Debbie Berry. Yes, Debbie Berry with
Okay.
Point Bank. Debbie, how are you doing today?
I'm doing pretty good. How are you?
I am phenomenal, phenomenal.
Great.
So look, we were talking a little bit, quote unquote, in studio before coming on air today about kind of what you're seeing, overall with activity. And you say you kind of seen or seeing what
Mhm.
I would probably frame as a little bit of a shift, a change with some buyers, things that they're experiencing in this market. But if you don't mind, for our listeners, first and foremost, could you introduce yourself and kind of give our listeners an idea of who Debbie Berry is?
My name is Debbie Berry. I work for Northpointe Bank here in North Charleston, South Carolina. I've been in the mortgage industry for about 22 years now.
Mhm.
I did mainly origination. There was a few years I did management of a mortgage department at a local credit union. My primary focus is with first-time home buyers. So we are finding the slowness in the market, obviously with the higher prices and the higher rates right now. I mean, home ownership is attainable still, but it's just a little more difficult right now.
What are you guys doing? What are you doing to help buyers in this particular season?
Mainly, we're trying to create some different programs. The one biggest program that we just rolled out is the 2-1 temporary buy down program. So it allows for they have to qualify at the higher rate that the payment will actually be in the third year of the mortgage. But for the first 2 years, you can go 2 percentage points down the first 12 months. And then the second 12 months, it's going to be 1 percentage point less than what the note rate was. And then from the third year on through the 30th year, it's going to be that fixed rate that you signed up at 2 years ago. So hopefully, like if the rates do go up over the next 2 years, you've still been able to take advantage of that lower rate 2 years back when you convert in that third year. So that's
Awesome.
one of the programs. We're also
Okay.
working on a new program that hopefully will roll out, I think by the end of July. It's called Lock While You Shop. So you get to
Uh-huh.
lock in your interest rate while you're out there shopping since it's a difficult market and there's so many multi-offers houses buyers are out there. So
Tell our listeners, how long have you been in the mortgage industry?
22 years this November.
Wow. Okay. So
November 1st, my birthday.
you've seen interest rates higher than what they are now.
Yeah. I mean,
Okay.
even when I bought my first house, I think it was in 2002 or something, the rates were around like the 7%, 8% range.
Mm-hmm.
Yeah.
Okay. So you've seen a couple of quote unquote, a little bit of that. So, rates were higher, they went down, they went back up, they went
Mhm.
back down, and now they're back up again. During those time periods, what advice did you have or do you have? Because I mean, to be very direct about it, this is all somewhat of a repeat. What advice do you have for consumers during this time period? Because so many people are just hung up on what rates have done, not realizing that this is really the rates are still very good.
Yeah, I mean, they're still relatively low when you look at comparing it back in the 80s when they were like in double digits in the 18% range to buy a house. The only difference with this market versus the market back in like the 2000s is that the house prices are so much higher. And I feel like especially in the Charleston area, I can't speak for other areas in the United States, but the income hasn't kind of went along with the increase in like prices of houses. So that's where we're finding the difficulty. I don't think it's necessarily the rates. I think it's more with income versus the prices of these houses out there that it's hard to qualify the first time home buyers.
Well, I'll share this kind of and definitely please pick up. But
Uh-huh.
I'm starting to see like as inventory is changing. So we're getting,
Mhm.
more some people that were quote unquote. I believe my personal belief is that people have been just trying to time the market. That's something that we always see. People, okay, I want to get the most for my house. Great, that's what you want to do, but you want to move. So
Right.
now when you see the rates that went up and the cost to buy the next house is going to cost you substantially more, then now there's kind of this, okay, let me get my home on the market and get it sold. So we're starting to see, some other homes come on onto market at price points, because the market is kind of shifted around a little bit. We're starting to see a little bit of activity, a little bit lower,
Mhm.
price point. Entry level is now kind of, in my opinion, kind of moved to the upper 200 price range where, sometime a little while ago, you really wasn't buying anything for less than 300. I think gives some people a little bit of hope. But not to cut you off, what were you going to add a moment ago?
I can't remember, but I will mention one thing. A contract I got 2 days ago, it actually had seller concession on there, which was nice to see again because I mean it's so difficult for borrowers, first time home buyers to come up with a down payment in addition to all the closing costs. It makes it hard for a person to buy a house. So
Mhm.
that was nice to see. So
Awesome, awesome. I most certainly could agree with that as well. Starting to see a little bit of concession as well. Because again, we kind of gotten away from that time period where everything was just kind of rampant and no concessions and unreasonable requests or asks. I actually just saw that recently with the property. The owner put in a new HVAC system and they
oh
felt
nice.
their home was worth $20,000 more because they put in a new system,
Oh
but
wow.
that's a maintenance item, not a,
Right.
not an improvement to the property. So, those kind of things again make it a little bit more challenging because people are sometimes, they're stuck on what, was happening, several months ago and now don't understand that we're in a different time, if that makes sense. The market is always shifting and changing. So
Yes. Yeah.
people are not understanding that. So what else are you counseling prospective home buyers on? Again, you're someone that I look up to in the industry because you have taken, what I deem to be a hands-on approach. You're in the community, serving first-time home buyers. You've been doing that for a while. You work with agents doing home buyer education, all those things. So what are
Right.
you counseling and telling prospective buyers now that they need to be mindful of?
I mean, the main thing is just having saved assets. A lot of people are still coming to the application process and they have no saved funds. You just, in this particular time era, we can't buy a house with no money in the bank. One, because the seller's not paying anything. And then two, just you really need money. Some of the programs require you have reserves in your bank account or a 401k, especially if you have a lower credit score, that's going to be a requirement. So saved assets are the most important thing. Monitoring your credit score, not just coming to the table and applying and not knowing where you are, credit wise. I think it's important to kind of know what your credit history is and know if you need some improvement before applying. And then the other thing I think is important is people kind of educating themselves. Maybe there's home buyer education on the internet that you can look at and just know kind of what process you're getting into because I think it's important to have some knowledge before you buy a house. So those are my main suggestions. One thing I read the other day, my son shared an article with me about in Europe, they're actually trying to roll out a 50-year mortgage term. And I know that sounds crazy, but I think in this market in the United States with the high prices and the higher rates, I think it's important that somehow we get legislators to actually look at either a 40-year term or a 50-year term because the first time homebuyers it's going to be so difficult without extending that term for them to be able to qualify for the houses.
That's interesting. I know some other, like you said, some other countries, do offer longer terms or their financing programs. Some do shorter. Some don't do 30-year mortgages.
Right.
There's I think Canada is either 20 or something like that. Might be even less than that. I mean, it's not an extended period of time. But I mean, the idea and the concept, and they are actually or have been in the past some programs here and there that are
Mhm.
longer terms, over 30 years. But that does help ease the payment. So that would be interesting to see. And then obviously that would, provide some opportunity for some much needed relief for buyers that are very stressed and strained in this current climate, in this current market.
Another way, I mean, usually when you're in higher price markets like this or higher rates, a lot of people will want to do an adjustable rate mortgage. But
Mhm.
I've not really been seeing a big difference between like a 30-year fix and the adjustable rates, but it's still a choice.
Yeah, I mean, ARMs, adjustable rate mortgages, and they're not the culprit because the mortgage isn't the problem. It's the people in education sometimes are the problem. I remember when I first got into the business, back in early mid part of 2004. I remember adjustable rate mortgages were pretty normal. I mean, seemingly that was, you did 100% financing, and if you didn't qualify for that, you did an ARM. And then, later on it went to 80/20s and all
Right.
kinds of stuff, but it was always a minimalist approach, which was we want to minimize the monthly spend for the consumer,
Mhm.
which is not necessarily the worst thing. But if you're doing an adjustable, I mean, we know that it's going to reset one day, and you need to be factoring in being able to afford it when it resets,
Right.
not necessarily focusing on just being able to make the payment today. And a lot of times people would overextend. They go out and buy a house full of furniture, buy brand new cars and all kind of stuff. And it was time to refinance to try to stabilize
Mhm.
their rate. They just weren't able to do that.
And the reason a lot of loan officers encourage adjustable rates is just because you can do like a 7-year or a 10-year. So you've got that fixed payment for that long. And typically, on average, buyers usually stay in their houses, what, 5 to 7 years,
Hmm.
and then they look to sell and buy new ones. So that's why it's a good program for people that are, financially educated.
So that's the piece right there, and that's definitely one of the challenges, utilizing or educating the consumer to understand. And there's rampant rumor mills. You got people that just kind of is all over the place, and they're telling people not to do that. I mean, Lord, I've seen so many situations where people are advising or telling someone, well, don't do that. Well, you didn't do it because your situation didn't fit that. This
Right.
person may need to do it, and you're advising them or telling them not to. And because you're telling them not to, they're not listening to the professional who's
Hmm.
advising them and counseling them on pros and cons so they can make the decision that's right for them or right for their family, if
Right.
that's the case.
Because everyone's different. Every family's different. Every story's different for sure.
Exactly,
Yeah.
exactly. So, what is it that we can do to kind of to combat that? Obviously we on this show we always advise that, consumers talk to the professional. Yeah, your friend, your cousin, your family member, your brother, your sister, they bought a house and their experience was this, but your things may not match up. You may not be buying in the same place.
Hmm.
Maybe you're in one part of the country, they're in another. Traditions in the market are different, whatever that may be. But, we always advise people to talk to their professional so they can get the questions answered and make sure they have an understanding. In this climate, I mean, are you spending more and more time? I'm assuming you are, but I guess the question is, to confirm, are you, spending more and more time, educating buyers on their options and things that they could do, tactics they can employ to help them reach their goal?
Yeah, I do. I mean, when I talk to a customer and they don't really know a whole lot about the different mortgage programs, I'll usually, based on their credit score and other variables, I'll try to give them like a few options and then go over those options with them to see what they feel like would better suit their situation and their lifestyle. So that's what I do. I just give them like 2 to 3 loan scenarios.
So you do a lot of first time home buyer work.
Mhm.
Our show, our listeners are diverse. I mean, we have people here that, that listen, that are, ambitious to be a homeowner. So they're first time homeowners or will be. We have people that own homes and they're looking at, possibly selling. Maybe they got family or kids, children, or whatever that, they may want to share this information with. But your passion has always been something that I have admired because you champion those first time buyers. Now you do a lot of different programs obviously, but what program has been kind of like the best overall? Like what is one of the programs that you do that is has been a marvelous help for the consumers that you serve?
Just South Carolina State Housing down payment assistance. That's the one I use primarily with first time home buyers. And then I was using Origin because they were given $1,000 grant or gift, but they stopped the funds about 2.5 months ago. So
Mm-hmm.
we're very limited right now on who can provide down payment assistance to us because Origin also had a loan program that they used for down payment assistance, and they did away with that program too about 2.5 months ago. So I don't really know what's going on with their funding, but so we're very limited and we only have state housing right now because FHLB, which is the Federal Home Loan Bank of Atlanta, they actually ran out of funds, but then they must have been 45 days and they don't replenish theirs until the following year. So we don't have that program. There is a new one that one of my customers showed me the other day. So we're trying to get information on that. And it's another down payment source to find out if we can sign up for it or not. I think it's called like Hometown Heroes or something like that. We've never heard of it. So one of my coworkers is looking into it, see if we are able to sign up. Just
All
to
right.
give, we try to get as many sources as we can to assist first time home buyers, but right now it's just so limited.
Okay. Well, that's good also to know that you guys are a Federal Home Loan Bank lender. I don't believe that I was aware of that. So that's also good because that's definitely a huge help to, some prospective home buyers as well.
Absolutely.
Interesting, interesting, interesting. So let's switch the gears up a little bit here. And obviously, Debbie, I tell people jokingly that if I had a crystal ball, I'd be down at the pack a sack buying up all the lottery tickets because I know which ones are going to hit. So then I'd be on the way to the airport, on a beach somewhere with a Mai Tai shortly thereafter, worry about doing this. But kind of where do you see rates going? What do you think is going to happen? Let me put it that way. What do you think is going to happen? Not only just with rates, what also do you believe or think is going to happen overall with the housing market and how consumers are going to have to adjust? And that's
Again, I think they're going to have to do something with the terms of the loan is the one big thing that I think is going to have to be changed in the mortgage industry to assist first-time home buyers because I don't see the prices of houses going down at all. I can't see it. And then as far as the rates, I think we're going to kind of stabilize this year. Maybe, I mean, I haven't really heard a lot of like reports or like I try to listen to different webinars on the economy and what they think, but I don't know about next year. I just think we're going to kind of probably stay in that 6, possibly as high as 7% range for the rates is my projection. But I'm
okay.
not an economist, so I don't know. But I don't think we're going to see too much more increase this year. Right now, most programs are mid fives. Some
Mhm.
programs you're into the sixes. Usually that's going to be like investment. The ones that are kind of outside the box, like your bank statements or your investor cash flow, those ones you're going to typically see high sevens, low eights. But again, you're going outside of that traditional box. It's a riskier product for that lender. So they
Mm.
have to put, something on the rate.
Okay. I mean, that makes perfect sense. Again, risk is typically reflected in, the rate of return.
Right.
So the higher the risk, then the higher the rate the investor wants because they want to kind of hedge their risk, per se. And again, that makes complete sense, a perfect sense. So to get, I guess, in another direction, and you kind of touched on this, we serve and our listeners again are a diverse crowd. They're first time home buyers. They are, people that are considering selling property. Some are ambitious as investors and, super excited. We're, working on in the process of pulling together an investor group that will meet DSR loans, debt service ratio loans, and the investor products that you kind of touched on. Are you doing a lot of those?
No, I'm still trying to put them out there so people are aware that we offer those programs. I'm still trying to. I was talking to you briefly about the all-in-one program that kind of matches to the ones that they do in Europe,
Hmm.
where it's kind of they call it a first lien HELOC position. So you basically have this HELOC and then you tie in a checking account to it. It's a very unique product. It's actually kind of cool. So I'm hoping to get my sister to use it.
Interesting. A HELOC in the first position. That
Uh-huh.
yeah, that's interesting.
Yeah, so it's kind of like I'll use real estate as a realtor as an example because there's some months where you may not have that commission check going in. So you start off with this balance. So every time you make a deposit, it reduces that principal balance. But then in addition, because your checking account is tied to it, the payment's made automatically every month and it's an interest only payment. So, but whatever you're depositing is what actually reduces the principal in a much quicker pace.
Hmm.
So, yeah, like overall, you should see the difference in like what you've paid in interest because what it does is every evening, whatever you spent out of that account is what the interest is calculated on. So interest is calculated daily, and then at the end of the month, it tallies up those daily totals, and that's how they charge you your interest for the
Okay.
payment that
So
you.
obviously, the faster you pay it down, less interest that you pay, all those kind of things, and
Yep.
those time periods where there may be a little bit of a lag or what have you, then you're not obligated to make a larger payment. Just cover
The
the interest
the
interest charge.
interest only, yep.
That
And if
is
you didn't, have any money that one particular month, they'll just pull it and then pack it on your principal.
yeah,
That's all.
that is interesting. So you guys are working on something like that? That's
Yep, I had to get certified in the training, so I'm still kind of like reading up on it, and then hopefully I'll get some person who wants to try it out.
all right. Look here.
And become a knowledgeable expert.
There you go. There you go. That is awesome.
Yeah.
That is impressive. I mean, obviously that works great for that industry, but I mean, I'm assuming that you'll be able to use that with other type professionals as well. And I mean, ideally, someone that's commission based, something that will be very attractive to them as well.
Yeah, like realtors, LOs, car salesmen, anyone that's just got a whole lot of money going into a checking account. every month. Yeah.
Okay, okay.
And then
With
the other one for the investors is that investor cash flow.
uh-huh. So as you pull that information up, that's one of the debt service programs, correct? Where the debt service, the monthly income on the rent.
So yeah, that's a really unique program, especially for individuals who are buying investment properties who don't have like the tax return or the ability to use their tax returns to qualify,
Mhm,
or the bank statement is not something that works with them either. So this, they just take the rental agreement for the house that they're buying, and I
mhm.
think take a percentage of it. That eliminates a lot of paperwork, and especially with self-employed borrowers, using the tax returns, and most of them write off their incomes.
Very, very true. I actually was speaking with one of our group here. Matter of fact, a few of our group, because there was a few of them that was in the room and started asking questions as they're looking to begin investing, how to leverage these types of programs in order to help them achieve their financial goals. Wholly inclusive, organization. We want to well round our people. So, we're introducing them to outside of them, helping consumers purchase and sell property.
Mhm.
We're also introducing and bringing to them doing their own investment portfolio or what have you,
Right.
as that rounds the agent and their business out. Obviously, our model also, we want to attract more agents that have
Mhm.
that ambition as well. So again, we're looking to serve the whole agent, not just one side or one part of them.
Got it.
Definitely, definitely. Well, Debbie, if you don't mind, give our listeners your contact information.
Sure will. The number is area code 843-817-4202. And then my email address is Debbie, Debbie .berry, BERRY at Northpointe, and Northpointe has an E at the end.com.
Awesome, awesome, awesome. Well, Debbie, look, we have quickly went through our time today.
I
Uh,
see that. I just noticed the time.
yeah, yeah. So obviously, great conversation, and I thank you so much for sharing your
Thank you for
expertise.
having me.
You're more than welcome, more than welcome, and we appreciate you coming on today. For our listeners, guys, look, Debbie is the cat's meow, man. I'm telling you, I've known her for a tremendous amount of time, and I've watched her for all these years focus on serving and delivering on the expectation, which is that you guys will be successful in your endeavor for home ownership. That is what she prides herself on. I
Sure.
watch it, I see it every day. So, y'all, please give her a holler. Y'all check her out. I promise you, you will not be disappointed. She is an Exit Strategies radio show family member. Yes, in the group. Y'all, please make sure y'all give her a holler. So, as I always say to you, our listeners, guys, thank y'all so much for tuning in. Thank y'all for listening to what I always endeavor to be a public service. This announcement to you to say, hey, you can do it. You will get it done. Just keep going. Guys, as I always say to you, I love you. I love you. I love you. And I'm going to see you guys out there in those streets.